Coming to you live from downtown Detroit, this is Benzinga's PreMarket Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day.
Good morning, everybody. Welcome to this Friday edition of Benzinga's Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Dick. Busy show today. So on top of the earnings parade from stocks like Amazon and Ford, and from pull my list here, Mattel, Grubhub, T-Mobile, Starbucks. We're going to talk about all those, or at least as many as we can. We have a very interesting guest on as well. Dennis asked repeatedly, and Joel has delivered for us. Robin Deshayes is today's guest. She is the president and chief strategy officer at Miltonian Capital Management. She's an attorney and, most importantly, a distressed equities investor. She's going to break down PCG for us. What is happening with that bankruptcy? That'll be it at 8:35. So make sure you listen to that if you want to know what the hell is happening in PCG and what it means going forward. So a lot to get to on our show. Let's just jump right into it, Joel. What's happening overnight?
We got some red on the screen here, down 5.25 handles, 29.21. Couldn't clear the close for very long. Your close 26.25, 26.50 your high. That's a big level on the upside. We've had a tight range this week, really from 12.25 up to 39.75. So we'll be leaning on that 12.25 low here to see if the rally can continue. Crude, bad day yesterday, and OPEC upping their shipments and their supply here to offset the Iran sanctions. So boom, goes oil down $1.22 at 63.99. Cut through that former support area, 63.85, your current low. Gold getting a little bounce up $4 at 12.8370. Silver back over $15 at 15.04.5. That's up 8.5 cents. Bitcoin taking a hit today, down $335 at 51.45. Triple D, we got news, we got earnings.
A lot of news.
Do you just want to start with a little review from yesterday and just talk about that price action in CMG off the open?
Yeah, let's do it. That'll be fun to talk about here. Do you have a time of quotes there, Spencer, to bring up?
I haven't been able to get back to as far back as yesterday's open yet.
Let me just, okay, so if anybody can bring the time and quotes up, they can follow along here, but I'll just describe, how the open went in CMG and why these things are so difficult to trade on an initial earnings report. So if we look at CMG's opening from yesterday, and you'll have different prices for the open depending on how your platform works, because the stock actually, if you look at CMG open, the first print was on ARCA at 9:30, even at 7:11:01, but that's not the open because it's a New York listed stock. The New York open is still done by the designated market maker on the floor, and the actual open did not happen until 9:34:11. So 4 minutes and 11 seconds after 9:30, we finally get the opening print. 9,000 shares trade at 709.09, which for CMG was basically flat on the day, just slightly down. Then I was just looking, and in the first 10 seconds, the first 10 seconds weren't that bad. It falls 2 points. But then in the next 10 seconds, it falls another 8. And then if you look in the next 40 seconds after the open, it was down 20 points. So, if you're trying to trade these things off the opening print, and you think, okay, I think, it was a pretty good report. If you're on the wrong side of it on an earnings report, there's just almost no way to control that risk. The spreads would be ridiculously wide. It's not like it was a huge amount of shares that took it down. And to take it down that first 20 points after the opening tick, you had a couple of, quite a few off-exchange trades, which you kind of got to scratch because they aren't influencing the market. They're just pricing it within the current market. It's all 100 share lots that are taking it down. And I would gather, if I just sat here and added it all up, to take CMG down 20 points in the first 40 seconds, it was only about 10,000 shares. About 10,000 shares sold, knocked it down 20 points. Why is that? Because there's no liquidity. There's no high-frequency guys in there sitting there making a market in CMG, at least not a tight market, or right after the opening tick on a stock that just reported earnings because it's too risky. So you got really no real market makers. So you got a few people setting orders out there, but that's it. So all I'm saying is if you're trading these things on earnings and you're trading them right off the hop, you get on the right side, it can be really good, but you get on the wrong side, there's just no out. If you thought CMG was a good report and you bought that opening tick, you were down 20 points in 40 seconds. And 2 minutes later, you were down, if I just go to the thing, it was down over 40 points, down at 675. So it's just so hard to control the rest. So just moral of the story is, if you're trading these things, it's probably best to sit it out until it starts to get some liquidity so you can control the risk. I don't know. CMG is always a wild stock, which is why I don't probably trade that one as much as I trade other stocks, because it's a $600 stock. But that's a wicked move. I mean, you can say, oh, 40 points, but it's a $600 stock. But yeah, but 40 points, $600 stock, it moves 6%. It moves 6% in 2 minutes. It's a wild child.
I don't know why they don't split that stock. I mean, I just
because they don't care. I mean, the companies don't care about stock traders. And some of them don't want stock traders trading their stock and moving it all around. There's a lot of people who honestly think that stock traders just are bad for the stock. They don't want them in there. I mean, I don't believe that, because I believe traders are the ones that provide liquidity to real players who want to get in and out of stock. So without speculation, there's not the liquidity there for big institutional investors to get out. But and for little guys to get out too, longer term investors. The speculators provide the liquidity. But in the first minute, there's just nobody providing liquidity. So you send a market orders on the first minute, you might get 10 points down. So just be careful if you're trading these things off the hop. And I just wanted to say on CMG, it wasn't like a barrage of selling came in. There's just no liquidity. So it dropped 20 points on 10,000 shares. I mean, what's the average daily volume on CMG?
It's right around 700,000.
700,000 shares. So you would not think that 10,000 shares could take her down 20 points. It can on an earnings day. And even on normal trading, like just even without an earnings day, that first couple minutes after the open, that's always where the liquidity is the lowest, because that's where the risk is the most. And we know all of our market makers now are mostly high frequency guys. There's no affirmative obligation. So they're not going to sit there, make a 5-cent market and get run over. So they're going to back off. So, and that's why you see in the first, opening 3-4 minutes for a lot of stocks, like AMD and Bank of America that always have a market, but stocks, that are thinner, that haven't really traded much, that they don't have direction yet. They haven't figured out which direction they maybe want to take a certain issue. And in CMG's case, they obviously hadn't figured it out either, because in the pre-market, it was kind of just hanging out, and then it falls 40 points in a matter of minutes, so it's definitely just a lot of risk.
It's way too much risk. It's just, yeah.
It is.
I mean, slow and steady wins the race. And that, we're just, the reason that we're talking about this is we just want to emphasize, a lot easier fish to fry, right, than trading CMG. I mean, if you, trade comparable size, I mean, I'm not trading 1,000 shares in that. I don't think many people are. But, just a little lesson in market structure, liquidity, and not get in front of the big boys. But, man, we had some fireworks last night after the close, Dennis. I guess we start with the big daddy here, Amazon. Trading in the green by 21 points. Spencer, how was the report?
Pretty good. Q1 EPS $7.09 versus a $4.72 estimate. So beat on that number. Sales 59.7 versus $59.66 billion. So beat on both the Q1 EPS and sales estimates. For Amazon, their Q2 sales guidance was in line. And as far as different segments, cloud growth was good. E-commerce was good. And then on the call, they said we're spending $800 million to reduce free shipping for Prime customers from 2 days down to 1 day.
Okay, so while and Amazon was definitely looking for direction last night because it traded up. Look at the after hours chart, and we'll break down. I'll let you break down the after hours action, at least for the first few minutes there, Joel.
I mean, you just got a nice pop up here, and just boom, 1970, right
Crazy
on the nose.
Moves. These news algos, man, they are just the news algos as a whole are losing money. I think, like as a whole, some of these programs are real good, but the ones that are trading on earnings. Like the ones that are trading on takeovers and stuff, that's kind of, stock is taking over at 50. Okay, we'll buy everything up to like 48 or 49. You're pretty safe. But I mean, these news algos that are trading off of headlines, off of earnings. Oh, cow, man. That's probably news algo buying up to 1970. Oh,
Yeah,
Ouch.
1970. I mean, you can't say anything that it's a relevant level, except just like when you're out there, it was a whole number, a whole number of 1970. Didn't have the gas to get to that high near 2033. That was your December high. So we'll use that as a target on the upside. It's going to take a 50-point rally to get up there. So that was the high, and then the low, you had a real quick dip after that. Dennis, you want to recap that initial dip that we had?
Well, it popped, and then it dropped, and then it kind of was just hanging out, and it was hanging out around 1915, about settlement. And funny thing is, a lot of times stocks, when they're wishy-washy, sometimes it's just a good report and stock's up, like Facebook. Sometimes just a bad report and stocks down, and we saw that in multiple stocks too. Sometimes you got the market kind of looking for direction. It doesn't really know which way it wants to take it. And then traders are maybe going to wait for the conference call to get comments from that, which we'll get to in a second. But sometimes you can get direction just from somebody on fast money as well. And last night, our friend of our show, a good friend of Joel's, Gene Munster, was on fast money. And he started talking negatively about Amazon. Just in the short term. He said he's still a believer in the long term, but he was kind of talking negatively in the short term, saying, expectations are too high and those expectations should maybe come down. And, I'm parsing his words a bit because I'm just going from my memory. But when he started talking negatively on that thing went 1915, 1910, 1905, 1900. It went down 25 points on his comments just from CNBC in a matter of 3 minutes. I was like, I can't believe it just fell that much. But when stocks are looking for direction, even a commentator on CNBC, and Gene is very well respected in the industry. Obviously, used to be an analyst at Piper and follows a lot of these companies very closely. He knocked a lot off of that. And the stock was trading down significantly, down 25 points until the conference call. And then during the conference call, and this is going to have some ramifications, I'm going to stick on this for a second, they said some stuff about one-day shipping. Spencer, what did they say?
They said they're going to spend $800 million to reduce the free shipping time for Prime customers from 2 days down to 1 day.
So the stock just ripped on that. So we were trading around 1885, and that headline came out that they were going from 2 day to 1 day, and they ripped it all the way back up to 1940. And then, it settled in. And so it's been really choppy after our session for Amazon. But there's ramifications here, and spinners all over it. And I was all over it last night as well. Right away, I'm thinking, okay, and my buddies at Bright saying the same thing. I'm like, what does that mean for Walmart and Target? And then actually, even Gene Munster on his little segment, they brought him back on, and he actually said the same thing. He said, I'd be scared if I was some of these big boxes, because you think about, your 2 day shipping. They know Walmart's kicking some butt with their shipping as well too. Okay, well, let's put a little more pressure on them. Let's go to 1 day shipping. So now it's back to you, Walmart. What's your move? So I tried to short Walmart, but it was pretty fast. There was some savvy traders on this. They weren't as fast on Target. So I was actually able to get short Target last night, just slightly down from the close. And the 81.30s, I think, was where I was finally starting to get some stock short. And it's down here significantly on this morning. And I'm not surprised. I've actually already covered because I feel like 2.5%, the scalper blood in me. I feel like that's pretty good priced in. But Walmart, same thing. Walmart's trading down 2% on this. I feel like a lot of it maybe is priced in, but just be careful. Sometimes these things can continue. But it's putting pressure back on Walmart and Target here, and that's getting priced in this morning.
All right, I'll just break down the action here in Amazon. It is trading in the green. This is called $25 here, trading at 1927. Easier to find support. Parallels at 1900. Those from the last 2 sessions. So that's your good support. Not looking for a breakdown until we take that out. The close was near that area too. So boom, 1900, huge. On the upside, I want to see what happens right here off the open at 1930. The reason of that is we had a pair of highs from Tuesday and Wednesday there. And then you clear that area. There was a seller there for 2 days. Man, hey, what the heck? Maybe take a look at that pre-market high. Still quite a bit of ways off that all-time high. That all-time high made in Amazon is over 2,000, but man, we're getting pretty close to it. So 1900 to 1930, if you can call a range in a $1,900 stock, that's my attempt at it.
I'm slightly, scared that I covered this too early. Sometimes my flaws with my own trading, and you guys can help me with this chat too, is that scalper blood me, which I joke about a lot. But a lot of times, I'm trading headlines too, and I'm pretty quick. for a human being, I feel like I'm very quick. And I feel like I analyze things pretty quick too. And that's why I was able to get a short on target last night. Sometimes I feel like I get in and then, I leave the meat. You know what I mean, Joel? Like you're in the trade and you get in so early and you're making money, quicker than a lot of other people because you're in it so fast. And then I cover too soon. I think I might have just did that on target this morning too. Because like I said, I got short target last night on this news in the 81.30s. And it got down to $80, and I was like, 80 is a big level, and it's a pretty good move for the stock. And I'm looking at Walmart only down 2%, and I kind of feel like it's more attacking Walmart more so than Target, although Target's going to be affected as well. And I'm like, 80 is pretty good, and I cover. Now it's 79.60, so I hope I didn't miss the big bulk of this move. But anyways, I've already covered, and sometimes I got to slap myself on the head here because I'm always very good at entering. I feel like I'm very good at entering positions and very good at figuring things out quickly, quicker than the average bear, because obviously I was able to get short the target last night. But I feel like I leave a lot on the table, and I'm very good at entering the trade and very poor at exiting.
Dennis,
and maybe that's the scalper
let me just
blood,
say one
but
thing here. You really were going against the trend here. And I think it's a little bit different on the short side here. When major uptrend, multi-year uptrend here in Amazon, you're going short it. It's just, if you don't cover when it's going down and it turns.
Cover when you can, not when you have to.
Exactly.
There's a good point there too.
Yeah.
Do I have to in the pre-market though when nobody else is really trading yet? Does this get a washout on the open? And maybe that's the better play. I don't know.
Or parceling out.
Borrow. It's a good trade. I made $1.30 on it. It's a pretty good trade, but I feel like now I see in the 79s, I have buyer's remorse for my cover.
One of my dad's, not one of my dads, one of my buddy's dads, you say, borrow money from the bank when you can, not when you need to. And that, that's kind of in this situation. Cover when you can, and because you never know, these things are going to turn major uptrend. They say something.
And sometimes then there's no out for you too. So, I feel like Walmart's the direct, play off it to be short Walmart. And like I said, some people were really fast on that. Walmart was down $1 very quickly on that news. So there's some very savvy traders out there. And Target kind of lagged a little bit. I was like, I think Target could get affected by it too. So that's why I was playing that too. But anyways, we digress here. We have a lot of reports from last night. We should get to some of the other big ones here too. But just be cautious if you're trading Walmart and Target. That is why they're trading down here this morning. It's the commentary of the one-day shipping from Amazon.
Intel.
All right, Intel, let's just say this report wasn't as good as Amazon's. Q1 EPS for Intel, 89 cents versus an 87-cent estimate, so a 2-cent beat there. Sales 16.1 for $16.02 billion. So essentially slight beats are in line for the first quarter, but their guidance was weak. Q2 adjusted EPS guidance 89 cents versus $1.01 estimate. Sales of 15.6 versus $16.85 billion. So light on the Q2 EPS and sales guidance. Fiscal year guidance was also light for the EPS and sales, and I read that it was the first time in 7 years that their revenue from, let me pull it up here, sales in the data center chips declined on a year-over-year basis, first time in 7 years.
Yeah, and there's markets speculating that AMD is eating some of their lunch because AMD has actually turned red here now, but AMD was actually trading up on this news, which is crazy when you think about, the pairs world, and you had every chip stock getting hit last night on this Intel stuff, and then you see AMD trading up on it. So, just be careful. Sometimes they just don't move directly together. Sometimes, it can be a competition thing. If AMD is eating a little bit of their lunch, actually the poor Intel numbers can sometimes be good for AMD. AMD is not really trading down on this, which is impressive. And it was, like I said, trading up last night on this at one point in time. The Intel's still one of the biggest positions in my long-term portfolio. And I looked at it. I honestly thought about lightening up before the number, but I was like, you got to stop trading your long-term portfolio. Well, in this case, I should have been trading my long-term portfolio. I should have sold the thing at 58 or 59 bucks. I had multiple days to do it there. I did not lighten anything up. And obviously now I've given back a lot of my gains from this recent run.
Why did it go crazy on the 6th or on the 17th? Was there some good news from another chip company? They looking
what
through
was that news? I'm trying to remember now too.
Yeah,
there was something.
That was the Apple.
No, it was something.
Just April 17th. That was the.
that was the Qualcomm.
That was Apple Qualcomm.
Yeah.
Apple Qualcomm.
Yeah, strange move on that. This is a really.
That was the sell. That was upside capitulation.
Yeah, Yep.
We talked about capitulation on the downside. That was the upside capitulation. We can see that now. Hindsight's 2020. But when you get a rip and rally like that in a big stock like Intel, ring the register on some shares. So here, 19 years in, and I'm still learning.
Yeah, no, you have to look at it that way. Very interesting pre-market chart here, and there's some major price discovery going on as we speak. The initial surge took it down to 52.90, 52.85 was the actual low, and it's trying to bounce, but it's not. And I'll be keeping an eye on resistance at 54.5. That was a little pop, but boy, oh boy, bulls and bears are just squaring off here in the lower 53 handle. I remember off the last report, it had the dip. It had a major dip and ended up maybe took a day or two to come back. But right now, you're filling the gap and holding 53. So I'm going to stick to that because I see several lows just under 53 and at 53. So that's the area. I'd say 53 holds. You got a chance for a rally. No chance. I won't say no chance to fill the gap. But I don't know, just kind of feel like buyers are coming in here, need to hold 53. After that, I see a daily low at 52.38, but just a lot of congestion here, a lot of bulls and bears squaring off. So 54.5 on the upside. I don't think I'd want to be short after that. And if it breaks 53 with a vengeance, would not want to be long. So we
got some breaking news on Ford. Right now, DOJ opening an investigation. Let's read you the headline. DOJ opening a criminal investigation into a matter relating to the company's U.S. emission certification.
Oh, you got
Ford was trading up substantially on their report, and it is right now giving a lot of that gain
crazy.
It's a big move here, and that's they haven't even mentioned this on CNBC here yet. They're always say breaking news. This headline just crossed 2 minutes ago. Stock is getting to be.
This is wild. And you know what? I had buyer's remorse because I'd been kind of playing forward with the options, long and short, been doing pretty well. And I said, you know what? The premiums are too high off the report. I'm going to sit it out. And then last night I see it trading at like 10.20. I'm like, holy smokes. And now this news comes out. This is unbelievable to see this kind of price action.
What do you think though? Okay, so JV Spec said he just got hit, so he just bought some of it. I almost think the same thing here.
Yep.
It had good numbers. We don't know much details on this. I don't know if they've mentioned this on CNBC yet. So often when they mention it, you get another little flush. But because you get the news flush, and then you get the 5 minutes later the CNBC flush from everybody else getting the news because it's 5 minutes behind. I don't know. I almost think like you had the good numbers last night. I almost think it's like a buy on this pullback here, but I don't know.
Yeah,
it's a tough play. It's really volatile right now, but I kind of like it here.
I tell you, everyone's selling.
I haven't done it.
Yeah.
But
I'll let it settle today. I'll let it settle. It's wild today, but I tell you, if I could get this back, being patient, if I could get this back, I'm going to wait for like the 950, 960 area.
Get your order out there. It's choppy right now.
Yeah. No, I'm talking for a long-term play. I'm saying
get your order out there. You're never going to get it. It's going to be right now on this headline because it's chopping around.
Wow. And you were trading monster volume. You got up to 1035. Dennis, did you get a piece of that? That had to be you out there.
I bought some right on the number. I bought some, and this is brutal scalper blood. I bought some at like 944.
No way.
Right? Yeah, you got time, man. You trading these headlines. I'm like reading it. I'm like, Benzinga, Charles walks it out. Charles good. He's reading me the headline. And I'm like, it's pretty good numbers. And you know what? Other things are looking, and value trades come back into place. So I bought some right on the number. And you know where I sold it right, and then it chopped around, and I should have just held on for like 5 minutes. But there's the scalper blood.
975.
No, I sold earlier than that. I was in the 9. I took like 10 cents on it. Brutal trade. Anyways, but it's just silly. So should have held it. Gotta stop. Excellent entry, awful exit. That's the moral of my life. That's the story of my life. I feel like in trading. But anyways, we are bouncing already here. So I had a good call just there. 976. JV Spec, you just got hit. Good job. 988. I feel like this is a buy. Okay. If CNBC gives you another little drop on it, I feel like this is my opinion. We don't give recommendations, but I feel like this is a buy on this pullback.
Okay, we'll wait for them to cover it. Maybe
JV Spec said he bought at 950 yesterday.
Oh, really? Well, if you're quick and you're trading it and you're interpreting the headlines. So, all right. So we already covered the Fords here.
You had some time. You had a good like 30 seconds on that headline. You don't have to have a news algo run into trade headlines. And sometimes the news algos do a bad job. Sometimes they overshoot. So it's not always just a wicked, pop. Sometimes the wishy-washy ones are the best, because then you've got an interpretation thing happening. And that's where a human mind is better than having a computer, when you got a little bit of interpretation to get to it. So even on this, who do you think's selling all this forward right now? Who do you think sold that whole thing initially? Who do you think was selling on that DOJ criminal investigation headline?
The high frequency traders.
The news algos.
Yeah.
And not necessarily even high frequency traders, just anybody running a news algo. They're selling it. They just sold it to people like JV Speck in our chat, 976. 995.
We know the sellers and we know the buyers. We know it all here on Benzinga's Pre-Market Prep Show. No, that's funny. No, you're right. You're right. And now we're starting to rebound. The low there was 971. And you also got to think about, okay, so you come in, Ford never moves, right? You're short, you're a big institution, you're short a couple 100,000. Who cares going into the report? And then boom. It's over $10. You got to be kidding me. And then you get a dip like that. You don't think that people that were short, or if you shorted it at 1010 or 1020 last night, you're not looking for this thing to go to 940, 950. So there's where your buyers, but nice trading range. Wow. What a peculiar day to bring out the news on Ford. Could have come out
that's
yesterday.
Just breaking. That's not coming from Ford.
No, I know.
That's from
I know.
DOJ. So,
Okay.
that's those are headlines there. But okay, so they're going to investigate them. There's a probe on their U.S. emission certification. That doesn't sound like that's going to be a big hit to their business here. And from the report last night, it sounded like they were doing some good things right. This F-150, I own an F-150. I've talked bad about Ford for quite a while. We know I sold it out of my long-term portfolio right in this area. So I'm starting to think like maybe I should just rebuy those shares. I don't know, but maybe I should trade the Tesla in for some Ford. But I'm not going to do it. So I still some issues here. We don't know where we're going long term, but short term, look at that 976 JV Spec. Good buy if you just bought that down there. It's 1002. That was a buy.
Michael Polini in the YouTube chat pointing out they also smacked GM down on that headline.
Yeah, exactly. Why are they smacking GM down on that headline? That GM down to 39.50. Oh, that was an opportunity, guys. And I hit myself that I didn't strike there too. Obviously I called it out on the show at 976, 980, but I wish I would have struck with you guys because we're obviously trading up here already. I think GM's a buy. GM really got high on that report too. We should talk about that. How high did we get on GM on the Ford numbers last night?
Let me take a look at GM. Oh, just first of all, Steve Roberts made a comment, Dennis. He says about you, Dennis. He says you the FIFO trading technique. First in and first out.
I never thought of that. Who said that in the YouTube chat?
Steve Roberts said that.
Good. I'll give him props, man. That is me. I have a FIFO problem. I never realized it. I'm first in, but first out. I have a FIFO problem. That's awesome. I'll use that on my show forever now. Thank you very much.
Say that when. That's
me. That's my problem. I should write a book on psychology. I'll add that. Rob Friesen, Bright Trading, writes about trader psychology all the time. Right on the FIFO. That's what I have. I have FIFO.
Talk about it when you're on the couch with your doc on Monday. You got a high up to 40.56, and it came in after that. What's been the high of the move? 40.45 was your high the other day. So you backed off. Let's call 40.5. Resistance here for GM. But, this is one of the times where in the past has gotten off 40 and it's really had a hard time, and it did again. But, man, if this thing could ever get back and hold 40 there, I think another move up.
Might do it today. It's going to try 40 again today.
Cents. They report later in the week, and I'm going to have to dial up Michelle Krebs to get her on to analyze the reports. But let's move on. We got a lot of other reports here. Well, imbalances, Dennis, anything you want to cover in imbalances?
Let's go take a look. Hot off the press. I haven't had a chance to look here yet, so let's do that now. Wow, small GE 200,000 to sell always stands out. Ford 144,000 to buy. We know the good numbers last night is the reason for that. Sprint 148,000 to buy, but Sprint's such a small stock. 148,000 gets gobbled up within a nickel. Ooh, wow, I don't see really anything else standing out here. They're pretty small.
And boy, oh boy, it's options expiration, but it's not the end of the month. You notice that? We got the end of the month here. Hey, what's popping here?
What do you mean it's options expiration? It's a weekly expiration.
Weekly, but we're missing the end of the month the end of the month. April's won't be until Monday. We're getting a big pop here in the market.
GDP's
yeah,
out.
Nice pop in the spoos, Dennis. Look at that. I hope you're not getting picked off here.
I gotta watch. I'm getting canceling orders.
Okay.
GDP
Canceling orders in a hurry here.
GDP better than expected, 3.2% versus 2.5% estimate.
Yeah, big move here in a lot of stocks. So obviously, I did not see that coming here either. So
We usually don't have.
you don't warn me about these numbers.
No,
I was
because,
talking so much. The time's flying. I wasn't even paying attention. That's not good for my P&L here.
How often does GDP really move the market? Not
Good this time. Wow.
I guess it can. It has, but it's not a consistent move. So, sorry.
Yeah, I mean, I throw my Barons out on Thursday, and just I would not even look to see that number. So interesting move there. But let's take a look just at the futures real quick, since we did get that pop. 35.75. We still haven't breached that level. The high is currently 32. But you know what? And I talked about this yesterday, Dennis. Are the financials finally gonna lead us to higher levels? Look at this. Bank of America cleared out those highs.
Strong again this morning.
Yeah. And full disclosure, I do have a long Bank of America position, a short-term position, and I'm just thinking, okay, 6 times, 7 times, 8 times. Okay.
Wow, look at that.
Yeah. And it took it out yesterday. So we'll see. I mean, they could slam it right back down to 30.
And the book will be thick on the way up. It always is. But I mean, Bank of America can chew through some stock too. It trades a lot. So that Bank of America chart, you're right. That's not a bad call. Playing for a breakout there. Sometimes these breakouts don't work out, but sometimes they do too. I mean, the Bank of America one looks the best. If I'm looking, JP Morgan's kind of the same thing. It's been kind of hanging out, wanting to go higher here. Goldman's come off the highs. Morgan's kind of hanging out. It kind of looks okay too. In the city, they're all kind of hanging out. It's a good call, Joel. These banks are looking at you.
I mean, it's an area. I mean, the XLF is here. I mean, Bank of America's here. They had to go to. I mean, it's pausing. This is either the greatest resistance ever, or you're breaking out. And for me, I'm looking. I was talking with Sean yesterday. He's a little bearish, and I'm like, man, if these financials take off, then what are you going to do? Just another area to put money into. Let's just cover real quick pin interest. I get that wrong. Pinterest, right?
Pin interest. I've never heard it called that before. It should be called pin interest.
Sorry.
My wife loves Pinterest.
No, but
stock's been hot.
But Joel, at least you knew. At least you knew you messed it up.
I knew exactly.
I did that on purpose.
Well, you remember when I used to say NVIDIA?
Yeah, no, we all yelled at you for that. And then we had a nickel jar. You had to put the nickel in if you ever said NVIDIA. Then you never said it again. The nickel jar works for you, Joel. No, did you have that when you were a kid too? The nickel jar?
No. Who was it that got really mad with me? The guy with the long hair.
It was Dimitri.
Dimitri came over. He yelled at me about it. And I'm like,
and that's what did it. Okay,
when you get yelled at by
NVIDIA, or what's the other way to say it? I always say NVIDIA.
I used to call it NVIDIA.
Yeah, you can't say NVIDIA. Right. There's no NVIDIA.
Real fast, Joel. Real fast. Pinterest, go.
Pinterest. Did you see this stock? Since it's
hot.
Hot. I don't know what to say about this. Trading up another 52 cents. Trading up every single day. So I think maybe people were like a little worried about the Lyft IPO. I can't say anything bad about this. Making a new all-time high here at
$30. What's going to do at 30?
Okay.
Big psychological level. Let's see what it does at 30. Can it take it? I think it probably takes it out just to hit whatever's, if anybody's, going to be playing it there. And, then it'll hit more stops or hit, potential people buying it for a breakout through 30. Just watch, don't come back down through 30.
Okay.
So, but these things with 5 days of data, flip a coin. We don't know when this is going to end. It go anywhere.
Okay. All right. Quick break. What do we got coming up, Spencer?
We got a good guest coming up right now. New guest, Robin Deshayes, President and Chief Strategy Officer at Miltonian Capital Management. She is an expert in distressed equities, and we're going to talk about PCG. So we'll be right back in a moment with Robin. All right, and as promised, welcome back to PreMarket Prep. We are live with Robin Deshayes, the President and Chief Strategy Officer at Miltonian Capital Management, coming to us out from California. Robin, how's it going this morning?
Good. Good morning. How are you?
Good. We're doing great. Thanks for coming on. And she's coming on courtesy of one of our other excellent guests, Kate Long, referred me to her. First, Robin, you run a distress debt shop here. So PCG is doesn't fall in your category yet, but you've certainly been doing your homework on it. I just want to give a little history, and you mentioned this to me on the call yesterday. And just in regard to PCG, the utilities, the facilities. I mean, you grew up as a kid there, right? And what kind of observations did you make?
Yeah, PG&E services 40% of California's population. It's mostly Northern California, and it's been around a long time. And even when I was a kid, we used to vacation in the Sierras, where there's been a lot of fires now. And I remember looking around and thinking, these substations are so old. They were built, maybe some of them 20s, 30s, 40s. And many of them are still in operation today. And many of the utility poles and things like that haven't been upgraded in many years because it, was an area where there wasn't a lot of population. So I think it wasn't thought to be worthwhile to do anything about it. But now we're seeing that there are problems with those equipments, and it's causing some fires.
Okay. And we also just talked about, this is not the first time PCG has had some problems here. And it was 2000 through 2003. And I'm sure some of our other traders remember that. But just highlight, on the problems that they had regarding energy futures.
Well, there was a energy crisis back in the early 2000s, and there were a lot of blackouts, and it was caused by the relationship between the California utilities and Enron, who was selling them power contracts. And it turned out that there was a apparent power shortage, and in 2001, PG&E declared bankruptcy because its power contracts were too expensive and it had fixed rates. And there were a lot of finger pointing, and it turned out in the long run that Enron had been defrauding the utilities in the state of California, but caused a lot of damage, and it eventually caused the recall election of the governor.
Yeah, we'll get into the political situation of this in a second here. But, we watched this stock trade. It was trading near the $45 area, happy just sitting there, the good old dividend stock, not moving in, September, October last year. And then you get the news, and we've had a lot of news. And the reason I had you on is just here's the question that we keep coming up with, and you got a math explanation, and we love math on our show. What this thing's declaring for bankruptcy, but it's not going to zero. Help me with the math on that.
Yeah, so normally when a company goes into bankruptcy, the equity trades to zero and it gets delisted. So it's very unusual to have this big float of a bankrupt company. In PG&E's situation, it was a healthy company, or relatively, and they had this catastrophic loss all of a sudden, where they had the Camp Fire, and I think they realized they were probably going to be on the hook for it. Especially with the rules in California. And they saw it was a $10 billion liability, and it could be payable very soon. And because they're a public utility, their first priority is they got to keep the lights on. So they didn't have a rapid way to make sure they could pay both the cost of operating this massive utility, plus pay for these new liabilities that were very sudden. And so it could cause an insolvency crisis, even when you look at the assets today and you look at the liabilities, there's actually equity value. So the simple math is this. If you take all of the assets that are on the 10K, it's 77 billion of assets. If you subtract all of the liabilities that let's call the normal liabilities that they had for operating, that's 49 billion. Subtract that, you have 28 billion in potential value. And PG&E has said, we think the liability for all of these fires is anywhere between 14 billion, but it could be as high as 30 billion. On the 10K, they're saying, okay, we're going to call it 14 billion as a conservative estimate, and it could go higher. So subtract 28 from 14, you still have 14 billion in equity value if you believe PG&E's assessment of the value of its assets and then the value of all of the liabilities, including these fire claims. So the current market cap at $22 a share is about $13 billion. So it kind of makes sense that people perceive there could be more value there.
How do you, just my question,
ahead.
and sorry, Robin, Dennis Dick here.
Yeah.
How do you go through a chapter 11 when you still have, assets on the book? Like, what don't the debt holders here have something to say as well?
They absolutely do. And in a normal bankruptcy, the debt holders really control it. What makes this so unusual is that it's a public utility. And so whereas if it was a regular for-profit corporation, they could be forced to cease operations and have to liquidate if they couldn't sell assets and pay off the debtors. In the case of this utility, it must continue to operate. So all of those current liabilities and all the current assets, which are in the billions, like all the cash flow that's needed to pay people and maintain lines and all the regulatory assets they have to maintain, all of that will be kept, really, it's not available to debtors. And so then they have to think, okay, how do we pay? The debt is about, the short-term and long-term debt is about 22 billion. And then they have these fire liabilities. And if they had time to plan, they could sell assets, and many people think, oh, maybe they'll sell the gas assets. So it's a matter of, we can see that there's asset value there, but it's timing. So they filed bankruptcy because they need time to figure out how to cash flow these liabilities. Many people think that they will file for bankruptcy. That they'll sell assets. And we have these wildfire victims. More than 100 people have been killed in these disasters. There's been billions of dollars worth of damage. And so there's a ton of sympathy in California. And politically, it's it's a place where politicians have to be very careful. So, but the fact is, for PG&E and for Edison and for San Diego's utility, the way the laws work, it doesn't work very well, especially with these catastrophic fire seasons we're having. So the politicians are trying to figure out a way to limit the liability for these fires when it comes to the utilities. And I think the real issue is going forward fires. So we know what the financials for PG&E are today. The worry is, and the ratings agency said this, if California can't limit the liability going forward, what if there's another $10 billion fire this year? So this is the danger of that exists in just looking forward. It's not just the assets and liabilities today. It's what can happen going forward under the current regulatory setup. So in the legislature, they're scrambling to try to figure out how do we limit this liability. And that's the puzzle to solve this big problem of wildfires and the utilities, because if these utilities don't have access to the debt markets, they can't finance their operations. And, we know that utilities are highly dependent on financing, issuing debt, to pay for all of this. It's a big cash flow operation. So now we have ratings agencies saying, hey, you have to get it together. These guys cannot have unlimited liability, which is what they have today. So, and then the question is, if we limit the liability for these fires and they keep happening, who pays for that? Who pays for what the utilities pay for today?
Lot of unknowns there. So what's going on in the marketplace here? I mean, you have individual investors that, are stuck at higher prices. You have some that maybe, dipped their toe in the water under $10. You're seeing massive volume trading. You're seeing huge swings. Who's out there? What's going on in this stock? Who are the players?
Well, it's such an unusual situation, and I think it's fair to say it's become a bit of a hedge fund playground. It's just a trading vehicle today, trading on a lot of news. A news story comes out, it trades up and down. It's extremely volatile. The math we talked about, you can see where there's the definite argument that there's, value there. But there are many risks as well that we've talked about. So, if someone was in the stock at 48, and it was a utility and we all know and love them and they pay nice dividends, now it's at 22. I can't think that it will be paying a dividend anytime soon, nor would I think it would be back at 48 anytime soon. As a very speculative thing, there are definitely people who bought it at 7 and are very happy today. But it's a wild and speculative play today.
And it's not in the distressed area yet, but just, looking at the situations, knowing that hedge funds are, playing this, perhaps on the short term, trying to move it around. Is it just, for you, it's not in the distressed area. Is it just like, if you've been in it for a long time, you got the dividend, you had all this news, maybe it's just time to just wash your hands of it?
Yeah, it's funny because, we do distressed debt investing, and we thought, oh gosh, this is a huge bankruptcy. And we looked at it, and the debt now is not really trading at distress levels at all, because as we talked about, the debt itself is not particularly large or inappropriate. It's just the entire liabilities and the future liabilities that are so scary.
Where's the debt trading? Do you know, just a ballpark?
Yeah, it's at par. And
really,
there's some technical reasons for that that I don't know that we happy talk with you about it. But today it's trading around par, and it traded into the 80s. But there's a lot of speculation also in the debt that the coupon will be turned on, and I think that's extremely speculative. There is an argument for it, but again, we don't really know what's going to happen. So I don't own it, and I think it's, as I said, sort of a playground right now. So we are staying away from it.
My last question, Robin, is so what happens now?
What happens now is, May is beginning, and the legislature is scrambling, trying to, bankruptcies end up being really, let's make a deal. And so in this case is quite complex, because we have the debtor, it's a public purpose entity, but it's investor owned. And we also have legislative changes that need to be made. And normally that takes quite a long time. And yet there's also this urgency about fire season and new fires, and whether the other utilities could be downgraded. And although I would certainly hope for everyone and for the fire victims and for the people of California that it gets solved quickly, it's been our experience that politics goes pretty slowly. And so it's hard to say what will happen, but fire season is coming, and there's just tremendous risk out there.
Any comment? Just kind of getting out of your wheelhouse here, but any comment on General Electric, since we're talking about a lot of debt?
Yeah, we don't really
debt there.
There's a lot of debt. They have legacy issues stemming back to the great financial crisis, and I would say is a complex situation, and looking at the debt, we do actually own some of the debt, and we're comfortable with it, but I wouldn't want to comment on the equity.
Okay, all right, Spencer. Thank you very much, Spencer.
It's my pleasure.
On the line, Robin Deshayes. She's the President and Chief Strategy Officer at Miltonian Capital Management. Thanks for the time this morning, Robin.
It's my pleasure. Thanks for having me.
All right, have a good one.
Bye-bye.
How'd I do, Dennis? How'd I do?
Good.
Yeah. Yep. Yep. It's
That response to GE. I don't know if we ever had someone laugh at that hard at
a GE question.
I mean, it's not distressed debt, so she's
Right.
covering distressed debt.
Right.
She actually owns, or they actually own some of it, so obviously they don't think it's going to get distressed anytime soon. I mean, just because the stock is weak doesn't mean we've got a potential bankruptcy on our hands. I don't think anybody on GE, even the most bearish analyst Inch and Tusa there, they're not talking about insolvency here. They're just talking that they got a lot of business problems trying to figure it all out. But GE can pay their bills. So I don't know if it's eventually a problem, but as of right now, debt can always be, debt can be a problem, not just, because you can't pay your bills. It can just be a problem that it holds you back from expanding your business and fixing your issues because you've got so much interest payments all the time. So it can really hold you back in that way as well. So it doesn't necessarily have to be distressed to be a problem. So we know AT&T, same thing. There's a lot of debt there, so it gives you issues. It handcuffs you, with doing other deals too, maybe better deals. So there's so many reasons. And once you start to get over leveraged, even though you can still pay your bills, it can still handcuff you and handcuff your own business, potential there because maybe you can't borrow, for other activities that you want to, and just, I'm not saying AT&T can't borrow, but just, giving different examples of, that debt can still be an issue even if it's not distressed.
All right, let's just do a few more earnings plays here, and then we did get a question about the UBS.
Let's talk Tesla just quickly.
Sure. Okay.
So, everybody, we've had multiple people in the chat talking Tesla. Everybody likes talks. It broke down yesterday. So we did eventually start going down. It was a terrible report. It needed to go down. Let's see what we do here at the 244, April 6th low, 244. I'd imagine we're going to take it out. Why not hit the stops down there? Maybe through 240. Can we get back above it? The other consideration here is I bet you have a lot of options still on the board. The weeklies are still on the board here today for Tesla. And I didn't look at the open interest, but there's probably a lot of people playing the weeklies off of the earnings. So I haven't looked at it, but I would imagine that the open interest for this week was probably high. So is it out of the realm of possibility that you actually get the bigger move on Monday when those weeklies are off the board?
Yeah, that's true. That's true. I mean, it's down at the bottom of the trading range, right? And that's all you could say. I mean, actually, I like to use the 242.78. That was the March 217 low. So if you're leaning on that, why not? We'll see what happens. 4 points worth of risk, a lot of downward momentum. Pretty orderly sell-off yesterday, which is kind of a drip. So I'll keep an eye on that 242.78. If that can hold, then it's going to have to hold for more than once. But definitely at the bottom of the trading range, and the trading range that's been holding up since March of 2017.
UBS downgrading FedEx. We didn't give any ratings. That's probably the biggest one of the day because they were downgrading it to sell, putting a price target of 161. My portfolio is not doing very good today, my long-term portfolio. I still have that little piece of Tesla, but that's not hurting me. What's hurting me is Intel because it's actually a large position and it's down 7%. I also have a fairly large position in FedEx, and that's getting hit here this morning on this UBS downgrade. So my trading portfolio is doing very well. I had one of my best days of the year trading yesterday, and actually I'm doing pretty good with my trading this morning, with the help from some of the calls or with the short on target. But when I look here, my long-term portfolio is not doing as well.
Hey,
FedEx
Dennis,
down.
Hey, Dennis, I don't know if there is, and I don't believe that there was any other sell ratings on FedEx. This might be the first one. So we talk.
Seriously, let me go try to verify that too. That's what you have too.
We talk about analysts kind of playing catch up, and this I don't have any other sell ratings on FedEx.
I have two. There's another one somewhere out there when I'm looking. There's 20 buys, and I do have 2 sells on my information. I'm trying to see who it is.
So there's one other one. It could be.
I'm gonna go try to find it. Well, you break it down, Joel. I'm gonna try to find who it's going to be.
Let's see. We're just hanging out here at the lows of the pre-market session, down 291. Bad day yesterday. I'm not sure if there was a potential or there was a catalyst for that, but you can see that big red bar yesterday. So now all the buyers from yesterday in that 10-point slide going to be looking to get out here. The top of yesterday's range, 188.53, 188.63. That's not too far away, and you're closed right there. So we'll call on a pop, 189 resistance. On the downside, someone's bringing in some stock here in the lower 185 handle. And I see a pair of lows. Just one low at 184.80 and then another at 184.28. So you have to, I say, still above 184.60 here. I still just think you got a chance to rebound. underneath that, you could fall closer to 180, 82.22. That was the low on April 1st here. But just look at, you're finding some buyers here. I don't know if the sellers can take it through there off the open.
DZ Bank is the other one that has a sell rating. Maybe it's not widely followed, so maybe we don't, track them as much. But that's who the other sell rating is. It's DZ Bank.
Okay. All right. And
the analyst there is Robert Shurinsky.
Everyone else is neutral or buy. So
Yeah. So it's a good point. This is the first this is a major when you get UBS. So this is the first major that's got a sell rating on it. So maybe I should be ringing the register, but I'm probably sticking with it. Ugly day yesterday, though.
How about American Airlines?
Oh, they were out this morning. Let's give those numbers right now. AAL Q1 EPS 52 cents is in line with the estimate sales of 10.58 versus $10.6 billion. So essentially an inline Q1 earnings report. What do they say as far as guidance? They expect softness in the last minute bookings due to the 737 MAX uncertainty, and they expect that it will impact their pre-tax earnings by about $350 million.
Huh.
You know what?
You're buying it.
Yeah, no, I don't know if I'm necessarily buying it, but I'm paper buying it. I don't know if I'm going to pull the trigger here, but I don't mind it here.
Yeah.
We'll see. Let the dust settle maybe, but we got the one low. It's going to be below that move. Just looking at the recent move, 32.60 or below that. 32 bucks. Well, how low has it been in the pre-market?
Just going to bring that up. You went to a 31.80, Dennis, and you have a daily low at 31.70. So 50 cents above it. So I think looks good. I mean, the longer it takes to pierce that 32 level, take out 31.70, I think you got a chance, a little bit of a rally. Need to rally almost a buck to get to the bottom of yesterday's range. So let's call 33 resistance. But you do have that pre-market low coinciding with a daily low, and that's kind of what you like to see here. See if the buyers are out in the same place.
I kind of like to buy the dip on this play.
Yep, we'll keep an eye on it. Spencer, minute left.
Well,
you
yeah,
want to try and jam something else?
Well,
in
there are a lot of ratings, and I want to mention also, we talked about FedEx, Western Digital catching a downgrade this morning from Baird to underperform.
More bad news for my portfolio. Why are the analysts picking on me? I'm getting picked on this morning.
Do you own Bank United? They're downgraded to underweight at Barclays. Okay.
But I own FedEx and Western Digital, so that kind of sucks.
All right. Western Digital.
Don't look at the long-term portfolio. Not today.
Traded down $3 at 296 at 49.99. Got hit yesterday. I believe there was another downgrade yesterday, right, from someone else.
Oh, yeah.
It could be two in a row. So.
Well, it was upgraded a couple days ago. It's been saying it was right. Bank of America that upgraded it.
Yeah, it was upgraded 2 weeks ago last week by Deutsche Bank, and then they reiterated a buy from Bank of America, and they raised their price target. So
the chips all look kind of tired. Maybe that would have been, obviously in hindsight's 2020, Intel looked kind of tired too, and then it obviously got hit during the report. But they all kind of look tired. So Western Digitals, they've had a good run. I mean, think about it this year. Even look at the SMH overall. It's had a hell of a run. We went from $83 up to $120. I mean, it's up 50% almost this year. It needs to, have a rest. So, was it at the top? Maybe. I'm kind of, and I still own some chips. I still own Micron. I still own Applied Materials. I still own Western Digital. I still own Intel. I'm still going to hold some of these long term, but if I was overweight, I'd probably think about lightening up.
All right, 49.60
on strength. I like selling dips.
49.60 was your April 10th low
in Western Digital.
Well, yeah, Western Digital. 49.75 pre-market low. So let's see, 49.60 has to hold here. If not, things open up. I call 48.35 your next level, but really no great levels, like no triple bottom or double bottom to lean on there. So a little hard. I'll tell you, if you ever do get a rally, Dennis, up to that 54.5 area, ways away now, you had three highs right there at 54.60, but going to need a $4.5 rally. Anything though can happen in this market. All right, Spencer, overtime again for you. 902.
I just want to know, Dennis, are you SMHing at the SMH?
What?
SMH.
I know what that means.
I don't know what that means.
SMH stands for shaking my head.
Oh, I didn't know that. Yeah.
Your
Well, I'm
estimation.
shaking my head at myself because I didn't sell at my Intel yesterday ahead of the numbers.
All right. Well,
Do you know I made up TTLA?
that's not a thing. What? TTLA. What is that?
Or what's the one with talk to you later?
TTYL?
Yeah, I made that up.
You didn't make that up. Okay. Anyway.
You don't even know the acronym he's saying. You made
It was
up.
in the early 90s. I was on my Dell computer.
All right.
Oh,
days.
All right.
It
All right.
Did you
was.
invent the internet too, Joel?
You
No,
know
Al
what?
Gore-
Al Gore.
Yeah,
Did you
he
invent the
met Al
internet
Gore.
before Al Gore?
You know what? I tell you, I got the Dell computer out. This must have been early 90s. And I'm downstairs and I'm hooking it up. I'm having a hell of a time. I'm on AOL. I'm going, the old connection and everything. And I finally got it going. And I go upstairs and I'm like, Lisa, I go, you're just not going to believe this. And she's like, what do you do? Just leave it. What are you talking about? It's not a big deal. And you know what? Now she's the computer wizard. She is on the computer. She is the one that knows.
All right. And on that note, that will do it for our show. Thank you to our guest today, Robin Deshayes. Thanks to all of you in our chat rooms on YouTube and premarket.benzinga.com. Please remember all the information from our show is for informational purposes only, not meant to be an investing advice. If you missed any part of our show, catch our podcast. It's on iTunes, SoundCloud, Stitcher, TuneIn, and Google Podcasts. Also, the Benzinga Trading Summit coming up June 20th in New York City. If you go to benzingatradingsummit.com, enter the promo code PMP15, you'll get 15% off any ticket to hang out with Joel, Dennis, and myself.
And a lot of other
people, not just
cool
us.
people. I'm not going to do a teaser.
Cooler people will be there.
Cooler people than us.
But,
a lot of people that you're going to want to meet in person.
But we will also be there.
Oh, yeah.
We'll be telling you everybody once we get them all signed up.
Exactly. So on that note, everyone have a good weekend, and we'll see you again on Monday.